Welcome back, and I hope you enjoyed the speed networking. So joined us meanwhile is Jacopo Dettoni, editor of FDI Intelligence of the Financial Times, and an expert speaker on foreign direct investment. So Jacopo, welcome, and good to see you again.
Thank you, Robin. It's great to be here with you and all your members.
Thank you. So let's get started. With a crunching global supply chain causing shortages, COVID still raging, the health of foreign direct investment is an important topic to discuss. Hence, we carved out 40 minutes for this conversation. First, Jacopo will give us a 10 to 50-minute overview with the latest on foreign direct investment trends. Then we'll have a dialogue followed by Q&A from the audience. So please field your questions in the Q&A box. And towards the end of the session, we will also launch a poll. So please do participate. Jacopo, over to you.
All right, thank you, Robin. Yes, I guess it would be interesting for the audience that I give a brief overview of what we have seen in the past 18 months in the world of foreign investment. Just to set the tone of the discussion, then feel free to ask any question, and also feel free to get any question from the audience. So as a brief introduction, as mentioned, I'm the editor of FDI Intelligence, which is the foreign direct investment monitor of the Financial Times. And as part of our business, we have a couple of databases on foreign direct investment projects across geographies and across industries. And so they are really a valuable source of information for all the latest trends in the world of foreign investment. And we collected data since 2003, so we got also a pretty solid historic series to keep as reference for these latest trends. So obviously, I think that nobody is going to be surprised by the fact that this pandemic and the crisis has been really disruptive for foreign direct investment. Last year, FDI went down, depending on different criteria, around 30-35%. And this year, we still see depressed foreign direct investment flows. Our latest, the last time I checked, it was still down another 10% from 2020. So in the first 9 months of the year, was still down 10% from the first 9 months of 2020, and about 35% down from 2019 levels. There is some comeback in a way. We have seen the latest figures that we reported about a couple of weeks ago from September. They show some that in September, at least in the early months of September, FDI flows globally jumped back almost to pre-pandemic level. It was the strongest figures we have seen since November 2019. So it's an early sign. It's probably like too early to turn this into a much broader trend, but definitely FDI is picking up, although it remains depressed if compared to pre-pandemic level. Looking forward, there are different forecasts out there. UNCTAD is expecting FDI to go back to pre-COVID levels in 2022. I would expect this year to remain at least in line with what we are seeing in 2020, and then yes, definitely some recovery in 2022. But as you mentioned, COVID is still here, and the winter will really tell the extent to what extent vaccinations campaigns are being effective in mitigating the whole COVID risk, and definitely some of the disruption that we have seen will not go away, and it's in a way it's a bit of a spiral. We have seen, for example, in global value chain, the global value chain ironically withstood the pandemic, or the toughest months of the pandemic, except for the first months where China was locked down. but now it kind of like so many different bottlenecks have accumulated. There is the probably containers, the probably we trade barriers being lifted with different kind of like policies that are making trade more difficult. So in a way, this is kind of all accumulating and is creating a lot of different frictions in the market. But definitely there are major drivers of investment that are being have emerged, or at least have dramatically accelerated in the past 18 months, and they relate to certain sector, to certain geographies, and if you want, I can go more deep into those. Okay.
Yeah. All right. That's great. So, I mean, you mentioned containers, Jacopo. A container costs about $2,000 a year ago, and now it's well over 10,000, depending on where you want the container to go. Obviously, not sustainable. So, what will need to happen to keep goods and trade flowing again?
Oh yeah, well, this is a great question, and I guess it really relates to the fact to how West and East really trade and speak to each other, because one of the main reasons of what we are seeing is the fact that containers they go from Asia, from East Asia, Southeast Asia to Europe, the US, full of goods, but there is basically very little good that goes back to very little goods that go back to that region, so they remain empty in European ports, and so there is they have to ramp up capacity of containers in Asia to keep this flow, almost unidirectional flow of goods going. I think that this is part of like the broader issue of how trade and investment has become more regionalized in the past 18 months. This is something that we had already seen, but again, as many other things, the pandemic has really been accelerated some of these developments. Let me make a couple of examples, because I think that they are also pertinent to foreign direct investment itself. Definitely, when I mentioned some of the drivers that will drive new investment moving forward, I think of sectors like the digital sector, or anything related to the digital economy is booming, has been booming in the past 18 months. And this is there is also a clear reason to that. In the past decade, the capex and investment cycle has been pretty flat, and this is what we were already reporting before the pandemic. And this has created really pockets of big pockets of underinvestment across certain sectors, and things like, if you think of semiconductor or even electric mobility now, that everybody is rushing to try to develop capacity in those sectors. This is also due to the fact that, for example, automotive legacy players have been very hesitant in the past 10 years to invest in new electric mobility capacity, while the likes of Tesla were already building a little empire on their own, and now the balance of power has been tilted. And in the semiconductor industry, again, it's obviously the demand has boomed, but it was no secret 2 years ago that the electric mobility, for example, would require much more chips, for any sort of function, as well as the digital economy in general would be much more semiconductor intensive in a way. So there are sectors, and maybe I'll talk also about energy at the end, but there are sectors that will drive the capex cycle, the capital expenditure cycle, and are already driving the capital expenditure cycle, and they will do it though in a different way. This will certainly generate new foreign direct investment, but the geography of investment has been or has been reshaped, and the dynamics of global investment are definitely different than they used to be, particularly when it comes to these sectors. And this is there are different reasons for that, but I think that one of the major the main disruption that we have seen in the past few years is really the rise of this narrative of tech sovereignty, or in other words, the fact that governments, political institutions across the globe, they recognize that digital technologies are very sensitive, and they want to develop domestic value chains of these digital technologies as much as possible. And someone is calling this like vertical integration of technology, and we are seeing it everywhere. Obviously, China is a case point where, or rather, the US vis-a-vis China, when there's the Huawei, the whole Huawei issue with their 5G technology, and basically Huawei lost access to X number of countries in the West because of the rise of this tech sovereignty narrative. And now the new chapter of this is related to things like semiconductors. Countries like Korea, South Korea, they are forecasting, or they are encouraging their superpowers like Samsung or SK. They are encouraging them to relocate production or develop new production capacity in their own countries. And we are talking in the specific case of South Korea. They unveiled this K semiconductor, very appealing name, K semiconductor or K chips strategy, where they're talking about investing something like $500 billion exclusively in new capacity for semiconductors in the next 10 years, mostly by Samsung and SK. These are impressive figures. And similarly, Japan has also made a semiconductor industry a priority in their economic policy. The US is also encouraging companies from Korea or Taiwan, obviously TSMC, to relocate or to locate new production capacity within the US as well. Obviously, they're big chip players, so the likes of Intel, and the European Union is doing something similar too, and also China is doing similarly. Is doing something, has got similar policies. And this is not related just like to semiconductor. If you look at, for example, e-mobility, and the kind of like push that we have seen by the European Union and others to develop a local value chain, for example, for batteries, because these are technology that have become so sensitive and so vital for the development of overarching policies and strategy, and the control of this value chain will really make or break the technology prowess of each region, each country, each geography, and eventually their final level of competitiveness.
Yeah, let's drill down a little bit more on this notion of regionalization of trade and investment flows. I mean, the numbers you mentioned are of course staggering. You mentioned also the local value chain, that notion. And do you see from approaching this from a more global trade and investment flow perspective, if those investments are now going to be almost instead of outsourced, insourced within certain regions or within certain national borders, like what is the impact going to be on cross-border trade and investment?
Yes, definitely. So this is the endpoint of this dynamics. I believe definitely point towards the fact that we will see more and more regional platforms for trade and investment, and we are already seeing it. If we look at just like our FDI figures, back in 2008, intra-OECD investment, so basically investment from one country belonging to the OECD to into another country belonging to the OECD was made up about 40% of global investment. Obviously, the OECD is kind of like considered sort of like developed or advanced economies, and they are part of this. So they seem to be like it's more like to like investment, like to like trade. So back in 28, it was 40% of global investment. Today it's about 65% of global investment. So it's investors seem to have accelerated in a way a divestment phase where they leave countries that are not very familiar with. They leave markets that are not necessarily aligned in terms of like overarching policies with their own markets, and they relocate their trade and investment capital into either the domestic market or markets they are more familiar with. They are more they understand the rules and the regulation better. And this again, if you look at like this tax sovereignty idea, this is again will definitely drive more the development of regional platforms, and in a way that every country, every policymaker is facing at the moment a bit of a trade-off between efficiency and resilience. Up until the COVID crisis, we were living in a world where everything was about efficiency. So many manufacturing companies were relocating their production capacity to countries where they could produce in a more efficient way, and therefore re-import finished products and sell it at a bigger profit. The pandemic has highlighted a lot of the weaknesses of this model, particularly when it comes to reliance on one or a great reliance on one country, obviously China. And so now there is a big push to make value chains more resilient, and the policymakers are sort of like jumping on this narrative. And so why don't we make them more resilient, by making them more domestic? Mm-hmm. And this is what's happening with Korea. And the question mark is this going to work? Because at the end of the story, there were reasons why, there were business reasons why those investments were not were located in places like China or Southeast Asia, and bringing them back obviously has got an appealing resilience element, but from a business angle, I think that proof of concept has yet to come true in a way.
Yeah. On that proof of concept, and I'm just looking also at some questions here from the audience. The whole notion you mentioned, of course, again, South Korea, and the notion of reshoring, right? The question in the audience is that many countries, even within the EU context, for example, or even the US, are so dependent on with their supply chains from very specific areas out in the world, mainly the production houses in Asia. But yet that reshoring is not really happening, which is a very different conversation than saying South Korea wants to become a semiconductor powerhouse. That's not so much related to bringing the supply chains closer to home. So do you see this reshoring, as we sometimes call it, is this really going to happen, or are we just still in sort of a freeze moment because policymakers can't sort of figure out what to do?
Okay, I think that there are two elements to this story. Companies that have a footprint in China already, frankly, they got no reason to close everything down and leave, because China is going to be the biggest market in the global economy, and it is going to be a bigger domestic market. So the paradigm shift that we are seeing in the Chinese market is really staggering. And also here I got figures that I can give you later. But the point is that from an export-led economy is really becoming a more domestic consumption driven economy. They also at the political level, they approved this dual circulation strategy, where basically they want to emphasize domestic production for domestic consumption. And this is really a paradigm shift. So if you are an investor with some operations in China, you are probably willing to use those operations to serve the domestic market, whereas in the past you would use them to export back to the US or Europe or other Southeast Asian markets. So, but at the same time, you are probably building up new capacity somewhere else to serve the same functions that your Chinese operation used to serve a few years ago. So we are seeing, and we are definitely seeing it already, capacity being moved to places like India, big manufacturing capacity being moved to India, big manufacturing capacity being moved to just across the river in Vietnam. When it comes to North America, some manufacturing capacity being relocated in Mexico within the USMCA sort of like framework. And Mexico, by the way, it's even a more convenient place to produce if you look at just like from a cost perspective perspective. It's nowadays is more convenient to produce there than to produce in China, where the wages and labor and inputs have been becoming their cost has increased over the years. So I definitely see it happening. It's not a black and white scenario where.
Jacopo, sorry to interrupt you, but we seem to have the connection is going in and out. Let's see. Do you hear me, Jacopo?
Yeah, can you hear me now?
Yeah, you were going in and out. So maybe if you don't mind, maybe also switch off your video. Maybe that'll help with the connection. We can't hear you now. So maybe switch off your video, Jacopo, then maybe the connection will be better. Let's see if Jacopo is still with us. Jacopo, are you with us still? Jacopo, can you switch off your video? Then that will help with the connection. So while we have, there we go. Jacopo, is this better? Okay, he hears us, but Jacopo, you hear us?
Yes, I am.
Okay, still very bad connection. Still a poor connection here. We can't really hear you, Jacopo. Maybe sign out and sign back in if that's a better option. And while you do that, maybe we can bring up our poll. Yeah, Jacopo, we can't hear you. Sorry. So maybe sign off and sign back in. That will probably help as well. So meanwhile, let's bring up the poll, because it's a very interesting conversation. We have obviously not touched upon some other parts of this conversation to do with tariffs and also inflation. And the whole question, there's certain sectors benefiting from the current situation, but which sectors and countries are actually being negatively affected. So I hope to continue that conversation with Jacopo momentarily. So meanwhile, let's pull up the poll. So do participate. And there's Jacopo again, coming back in. So there you go, Jacopo. Welcome back.
Thank you. Sorry about that.
No, not to worry. Not to worry. This happens. So we're back. So I'll let you continue.
Okay. Let me try to wrap up So yeah, it's not. I don't think it's a black or it's a black or white situation where everybody will suddenly reshore their operations. I think there is more of a diversification play for those investors that already have operation spread over different markets. For new investors, I think it may be a different story. We are already seeing foreign direct investment decreasing when it comes to China. So it seems that investors, while at the same time, financial investment, portfolio investment by foreign investors into China is increasing. So basically, there is a bit of a dichotomy there. It seems that foreign investor now seems to be more willing to take exposure to the financial markets in China to bet on the growth of the domestic economy, while they are more careful to take a direct exposures with their manufacturing activities or with any sort of other activity to the Chinese market because of trade tensions, because of political tensions, because of always a kind of challenging environment to navigate when it comes to direct investment, the Chinese market. So in a way, this kind of these are the two angles of the reshoring question.
Yeah, no, great, and I think on the reshoring is also a matter of as producers, either services or manufacturing, to be closer to where your customers are, and that's, I think, a fundamental shift from what happened 10 years ago during a financial crisis where China was not that much of a home market. But I really want us to touch also, before we go to question with the audience, the whole notion of tariffs. And sort of what is the impact here? And because you did mention that policymakers are looking to how can they get trade flowing again. But after this forum here today, later this afternoon, I'll have a podcast, an interview with a U.S. member of Congress who's in the Foreign Affairs Committee, and the whole notion of tariffs. Of course, this is a story of the largest economies in the world. What is the impact of tariffs? What can be done are they being circumvented? Is this causing is there real damage being done to trade and investment flows, and what's the impact on companies of those tariffs?
Okay, I think that tariffs are always a very interesting subject, and I would like to give a bit of a contrarian view on tariffs. Obviously, tariffs are not good for global trade and global investment. They are an additional hurdle. But companies they learn to live with anything, including tariffs, and we have seen quite a number of so-called tariff hopping investment, meaning that companies that to sidestep tariffs, they bring back or relocate within the market they want to sell to. I was speaking just a few months ago to a very interesting a company that produces electric bicycles, and they went through the whole cycle because they were producing in China 10 years ago, and then they relocated. There was the European Union raised big tariffs against some of the components for some parts of electric bicycles to protect the European bicycle industry. And so they relocated production within Poland. And then when Brexit happened, they are a British company, they kind of foreseeing some more kind of barriers to trade and investment between the European Union and the UK, they relocated within the UK. And this is nothing new. If you look at the US market, if you look at the Japanese auto industry, the reason why the Japanese auto industry has become so prominent in the manufacturing base of certain states, like in the certain southern states in the US, is because in the first place, the US government in the 70s, if I'm not mistaken, raised big tariffs to imports of autos, of cars from Japan. And so the big Japanese car makers, they reacted by making big investments in the likes of Alabama or in the likes of Georgia, to where now now are some of the main hubs of manufacturing in the country. So I guess there is tariffs are obviously a challenge, and tariffs will determine more regional trade and investment. If you think again to this example of Japanese car makers, obviously by relocating to the US, the cross-border trade between of cars between Japan and the US was shrank dramatically, because most of the Japanese cars sold in the US markets were now produced in the US market in the first place. So there are always two sides of the coin, but I think that global corporations, they are pretty cunning when it comes to navigate challenging market environments, and so I think that it creates more challenges, but it doesn't kill the demand and the offer for goods that are currently traded cross-border.
Yeah, and I appreciate the contrarian view. So you mentioned certain industries benefiting. Actually, you mentioned, of course, the electronics, technology, certain regions, also parts in the world. So where there's winners, let's call it, that's parties that they're benefiting, there's also some that are suffering more. So which sectors, which industries, which regions are actually going to take the short straw of this?
Again, I think that this goes back to what I was mentioning, whether or not this is going to be successful in the long run, because at the end of the story, it's about making a trade. You can, as a policymaker, you can raise trade barriers to foster your domestic industry, but you also have to make sure that you create also the conditions for that industry to thrive and compete vis-a-vis any other player. So I guess that when it comes to strategy like Korea, for semiconductors, it's really about trying to set up the best business environment for these companies to create to produce in the most competitive way. Korea now has introduced big fiscal credits for research and development activities in the semiconductor industry, and another few elements that are willing to make it to make the whole financials of a company like Samsung to produce chips locally really work. So I think that definitely when it comes, if you look at investment cycle, industries like semiconductor, electric cars, their whole value chains, technology infrastructure, we are in maybe at the beginning of a big capital expenditure cycle in these industries, and the governments are trying to make these investments regional or even local. Whether or not this is going to be a good strategy in the long run, it's really up to the governments to be able to create a competitive environment for those industries.
That's a very important takeaway here. So you do see, let me call it the sort of super cycle in capex in technology. And as I'm asking my questions here, I'm also incorporating some of the questions from the audience. And one specific question on this very topic is also, you mentioned technology, but many countries are putting a lot of chips in infrastructure spending. How do you see the impact of the funds allocated to these infrastructure projects on FDI?
Okay, I think that infrastructure, if I may take the energy infrastructure angle, I think that that's definitely an interesting one in a way that obviously there is a lot happening in energy. Many governments are trying to stimulate investment into renewable energy,
Jacopo, sorry to interrupt you, but we're barely hearing you. So maybe switch off your video, and then maybe we'll have a better connection again. Jacopo, can you hear us? Jacopo is at a conference, so his bandwidth is not ideal. So Jacopo, if you can hear us. All right, let's see if we can come back. We have another 4 minutes to go. So, but maybe let's pull up the poll if we have any poll results. We can look at what the audience. So does your company or organization currently have international investments? Almost 60% says no. That's very interesting. And then what about the next question in the poll? Okay, how important is having access to foreign markets to your company or organization? That's an interesting one, especially in the context here of this more regionalization of trade and investment flows, where global is now being kind of offset against more regional investment trends. Access to foreign markets. So of course, 76% of the vast majority and 21% important. So for nearly almost everyone here, having access to international markets is clearly very important. So let's think hard about what the impact is of the trends that we see, where those investments are more being at the national or regional level versus globally. And then I think we have one more question for the poll. Is your company or organization investing or planning to expand into developing markets? Let's see what the poll does there. Since we're talking about Africa as a key market for further growth, and here also a large majority saying yes, we are looking to invest or expand into developing markets. And I think we do have a final question in the poll coming off sort of the whole notion of regionalization of investment trends. Do you perceive trade flows being more regional than they used to be pre-pandemic? So let's see whether your views and experience here is in sync with what Jacopo was just sharing with us on this regionalization. Let's give the poll a minute. 80% says yes, that is very interesting. So this is clearly happening, more regionalization in trade and investment flows. All right, so thank you so much for the poll. I think we have lost Jacopo, but I do want to thank him for his valuable insights and perspectives, and especially wanted to thank him for being available to our network here today at this very moment, because for the audience to know, Jacopo is going to be a father any given moment now. So therefore, we really appreciate him being here with us. So let's go now to our members only next session, introducing the Trade Services Operating Manual. So please check the link in the chat and use this link to click to the next session. I will see you there in just a few.